Welcome back, traders. Thanks for joining me here today. In this short video, I will show you how to implement the Head & Shoulders SR regular indicator strategy to build a profitable trading strategy in the market. I will also show you my 100 times backtested result in a row on the Head & Shoulders SR regular indicator trading strategy concept. What is the Head & Shoulders SR regular indicator all about? The Head & Shoulders SR regular indicator, as the name implies, is an overlay trading indicator that transforms into the formation of head and shoulder patterns on the trading chart, thereby detecting trade setups in the market. To apply the indicator on the chart, type the Head & Shoulders S/R regular and select the Head & Shoulders SR regular by Fikira. As we can see, here's the trading indicator on the trading chart. By default, this trading indicator has green, red, and blue triangular or rectangular patterns on the trading chart. Let's right-click on the trading indicator so we can learn more about this trading indicator. Navigate downward and select the Settings option here. Selecting this will pop up the Parameter Settings tab. Under the Input option here, we can see the components which make up the Head & Shoulders SR regular indicator. It's advisable to leave the default settings. Here are the Date Range Filtering settings options. Here you can filter the patterns by setting the date period. Here are the Pivot Point settings, left bars to right bars. These are more setting options for the Head & Shoulders SR regular indicator. For easy recognition of buying and selling trade opportunities, we can increase the opacity of the color of the indicator under the folder here. We can slightly increase the opacity of the bullish color signal here. Let's do the same for the bearish red color and the neutral blue color here. How can we use the Head & Shoulders SR regular indicator to detect trade setups in the market? To detect buy or sell setups with this trading indicator, the indicator must form 6 points on the trading chart. These points are A, B, C, D, E, G. This indicator will wait until a valid point E is found, which means A, C, and E are aligned. Next, the indicator will find the highest point between C and E, which is equal to the head, D. Also, the indicator will find the highest point between A and C, which is equal to the left shoulder, B. Point A, B, C is the right shoulder. Point D is the head, while point EG equals EG confirmation zone. Take note, there's going to be two EG. One EG at the top here, and another EG at the bottom here. After this, the pattern is drawn, together with a trigger area E and G. E and G are the right shoulder area, which is the signal zone. When a bullish price close is higher than points E and G, the figure will turn green. When the bullish close of the candlestick is not higher than points E and G, the figure will turn blue. If a bearish price close is lower than points E and G, the figure will turn red. Let's check a few more examples to see how this trading tool can help to detect trade opportunities in the market. Here's a great example for us to study. As we can see on this chart, after the bullish candlestick here closed above the point E and G at the top here, the pattern turned green and the bullish trend was confirmed. Let's study the blue color that formed on this head and shoulder pattern here. This head and shoulder pattern turned blue because the bullish close of price here didn't close above the high swing of point B here. But later, price went ahead to close above the EG structure here, and the bullish setup was confirmed. Here's a good example for us to study for a bearish setup. As we can see on the head and shoulder pattern that formed here, the pattern gave a red color setup. After price closed below the point E and G structure here, the sellers resumed the trend into a more bearish rally. To set our stop loss based on this trading strategy, we simply need to place our stop loss opposite the direction of the E and G point confirmation. That means for a bearish setup, we simply set our stop loss above the EG structure here, once the lower EG structure is successfully broken downward and confirmed. Likewise, for a bullish setup, we simply set our stop loss below the lower EG structure here, once the upper EG structure is successfully broken up and confirmed. Now that we have known how to implement this trading strategy for buy and sell setup in the market, it's time we proceed to my 100 times back-tested trading result with this trading strategy concept. Here's my trading result after executing 100 trades for 5 days in the Forex market. With this trading strategy, I implemented the 1-to-3 ratio. On each trade, I risk $1,000 for a profit target of $3,000. That was on 100 trades for 5 days. I got 50 wins and 50 losses. My record for most consistent wins in a row is 5, and most losing streak in a row is 5. The gain on the trading account is 20%. In order to have a higher winning trading record with this trading strategy, make sure you combine it with key levels and trend following indicators such as moving averages.